What is up, investors, and welcome back to the Everything Crypto Show. I'm your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, as always, please remember that nothing on this channel is financial advice. These videos are for viewer education and entertainment purposes only, so please invest responsibly as I want this community to thrive in the long run, and I love and appreciate you all. And on that note, we have a very important video to get through today. We got to talk about a major centralization threat to the Cronos chain, how XRP is going to completely revolutionize the financial system in November of this year, and we also got some on-chain data analytics to show you guys what the whales are planning to do next in the crypto market. So on that note, we got a ton to get through today with no time to waste. It is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, I did just want to ask that if you've not yet hit that sub and like button, please consider doing so and joining the Everything Crypto Squad, as the #1 goal of this channel is to bring you all of the news that you need to know on a daily basis. Also, go ahead and follow us on our Twitter. The link is in the description down below, where we do a bunch of giveaways to give back to this amazing community. And on that note, we are going to hop right into the charts as we always do. And once again, I actually want to start off taking a look at the US dollar. This is a chart we have been keeping a very close eye on, noting the inverse correlation between crypto and the dollar. And that is effectively that when the dollar rips higher, it is a sign that we are in a risk-off environment, and therefore crypto does tend to go lower. And as you can see, we just continue to print new highs on the DXY over here. We are now all the way up to 108.81, and there is really clear skies ahead for the dollar up until 120 at this point. So I definitely think that in the coming months, the DXY is going to come back up to 120 before we finally cool off, and that does signal to me that there is more pain ahead in the crypto markets. Now, keep in mind that 120 will act as a significant level of resistance, as that is .com bubble levels, which is absolutely insane to think about. We have not been here in about 20 years, but it definitely does look like the dollar is headed back in that direction. Now, you're going to notice similarly that since the dollar has been ripping, that Bitcoin has been tanking. We are now sitting up at about 19.9K, so just $100 below that 2018 all-time high of 20,000. Now, Bitcoin is in the middle of no man's land right now. I am not making any moves on Bitcoin till I see a decisive move in either direction. And the first thing we're looking for here, we would need to see a breakout back above 23,000 to look bullish. That is where the 200-week moving average is. I do not think that is likely. I think the more likely scenario here is that we actually break our support at about 19.8K, and we come back down to revisit these lows at 17.5. If we revisit 17.5, this is where I will be looking for some more action on Bitcoin. Do we break below? In which case, I think we come all the way back down to 15,000, which is where I personally will be buying a bigger bag of Bitcoin. And then with respect to Ethereum here, we do look a little bit better than Bitcoin at the moment. We are still a couple of percent off of our 2018 all-time high at 1,400. ETH is currently sitting at 1,550, but do keep in mind that if Bitcoin is going to break down to 17.5K, Ethereum is most definitely going to break down below that $1,400 level. In fact, I really think that Ethereum is due to come back and revisit this 200-week moving average here at 1,257. We still have to test this 200-week and either validate it as a level of support or break down, in which case we could easily come back down to that triple-digit area on Ethereum. Definitely something to look for in the coming weeks, and those are pretty much the three most important charts in crypto at the moment that I am keeping my eye on: the US dollar, the Bitcoin, and the Ethereum chart. And if I was not already bearish on Q4 as it is, well, now we have Jim Cramer coming out here and saying that stock markets could end the year on a solid note. So if I was a bear before, I am officially a grizzly now. And this is not to pick on Jim Cramer specifically, although I will say that earlier this year, he did call for a 50% rally on Ethereum when it was sitting at $2,000, and then it proceeded to tank to 900. And then when it was at 900, he hopped on CNBC and called crypto and NFTs worthless, and then Ethereum rallied all the way up to 2,000. So point being, do not trust anybody that you see on the media. They are here to exasperate the news. If the market's going down, they're going to spread FUD. If the market's going up, they're going to be overly exuberant. And what I'm trying to say here is trust yourself, trust your gut. That is what I do. I stick to my guns. I don't listen to what these people say in the media. I listen to the charts, and I listen to what my intuition is telling me. And I think it's going to be very important in Q4, as we are going to see a lot of FUD, in my opinion, both on a macro and micro level. So just remember your plan, remember your long-term goals, and stick to them. And I am sure that if you've made it this far into the crypto bear market, that you can absolutely continue to do so. But I did just want to give you guys this reminder because, in my opinion, we are in for a very volatile Q4. And in fact, this week itself is actually going to be very volatile. We have two important numbers coming out: the ISM Manufacturing Index, which is an indicator of U.S. economic activity, and non-farm payrolls, which does track the total number of paid workers in the country. So Raoul Pal is basically talking here about how the data will make for a very volatile week ahead, and he's also looking at the US dollar just as we were. He says if the dollar keeps going, it is going to really break things. It has literally gone parabolic. And he also talks here, so he's also looking at 120 as a key level. He says that if you actually break this weak uptrend level of support here, that 120 is the next big level of resistance that the dollar will be attracted to. And definitely it does look like that is where we are headed. I mean, if you just look at this and look at the similarities between the dollar in the early 90s and how it rallied up to that level in the early 2000s, it looks like it is making a very similar move here. So all eyes on the dollar, and I do expect in coming weeks that it does go a little bit higher. Now, one way that I personally have opted to sort of protect myself from this ripping US dollar is a couple weeks back I went ahead and actually converted some Canadian into USD. Now I am simply going to sit on that USD and wait for it to hit that 120 level that I am expecting, and then I will convert it back to Canadian for a more favorable exchange rate. So that is one of the ways that we can actually hedge and protect ourselves from this crypto weakness due to the rising dollar, is to actually go ahead and buy that dollar and then convert it into other currencies when it does appear to have hit a level of resistance. We do also have some options data here that further supports we are in for a very turbulent Q4 as Ether and Bitcoin open interest leverage ratios have soared to new record highs. Now, why is this important? Well, the rising ratio indicates open interest is outpacing market size and increases the risk of volatility due to potential long and short squeezes in the future. Now, a short squeeze is a rally fueled by sellers dumping their bearish bets, and a long squeeze is a decline caused by bulls closing their bullish bets. The higher the leverage ratio, the bigger the impact of a long or short squeeze on the asset's prices. So you're going to notice here that Ethereum's future open interest has been higher than Bitcoin's since May of 2020, and that would definitely explain why Ethereum has been a much more volatile project than both Bitcoin and pretty much a ton of other alts. So the open interest is very telling in terms of that volatility level, and they do note here that the risk could be relatively higher for ETH than Bitcoin, given the ratio is about 38% higher for ETH, and a lot of people are also trading around the merge. So it will be volatile either way you go. However, do keep in mind that we probably will see some bigger swings in Ethereum. That really has been the trend since the start of the 2020 bull run. Now, we also got to talk about the black swan event here for Bitcoin, which is Mt. Gox, who will be unleashing about 137,000 Bitcoin back onto the markets, valued at about $3 billion. So for those of you who have missed a couple of videos where we did cover this, Mt. Gox was an exchange that actually went under about 8 years ago, and just now they have recently gotten approval to begin refunding their customers as Bitcoin that has been locked up for 8 years. Now, a lot of people have been flooding this event on Twitter saying that the dump is coming in August, that it is going to create massive selling pressure on Bitcoin. And while I do believe that it is going to create massive selling pressure on Bitcoin, it is not happening yet, okay? So this is FUD. Mt. Gox is not distributing any coins this week or the next week or the week after that. And this actually comes directly from a Mt. Gox creditor. He says the repayment system is not live yet. As it currently stands, you can't even register where you want your Bitcoin and Bitcoin Cash to be sent to. Payouts will also occur in tranches. So the only thing to keep in mind here is that it doesn't mean just because people are getting this Bitcoin back that everyone will sell it. However, the people who are crediting this Bitcoin are still over 4,000% in profit since the exchange shut down in 2014. And some investors are still afraid that a speedy refund of the coins could trigger a black swan event for the crypto market and a sell-off. Just keep in mind, though, it is not going to be dumped all at once. I honestly think it'll be more of a slow and gradual sell-off that'll just kind of attribute to the already negative momentum that Bitcoin does have going on. So I'm not expecting like a massive red candle as soon as Mt. Gox dumps the Bitcoin back on the market. Rather, it's just going to sort of attribute to the selling pressure over the next couple of months, in my opinion, as it does start to roll out. Now, in good news here, sustainable Bitcoin mining power mix has hit 59.5%, really showing how energy efficiency among Bitcoin miners is on the rise. So this is actually up 6% from Q2 of 2021 and 2% 2% from the first quarter of this year. This is one of the most sustainable industries globally. So go ahead and show this to somebody who is trying to FUD Bitcoin and proof of work, talking about the energy usage. And in fact, based on the findings in this article, it is believed that in the future, Bitcoin could become a zero emission network. If you actually go ahead and mine Bitcoin with flared gas and animal waste gases, this could easily help Bitcoin become a zero emission money. I definitely do think this is the future of Bitcoin, and a lot of people like to cite the energy use as FUD, not realizing that energy gets wasted all the time. And if we actually put that wasted energy towards mining Bitcoin, it could effectively become zero emission. And we have seen an example of this with Exxon actually using their additional gas emissions and converting it into Bitcoin mining operations. So very interesting concept indeed, and I do believe that moving forward, more and more companies will adopt this similar strategy. Now, we're going to dedicate the middle portion of this video to talking about the SEC, the Fed Reserve, Swift technology, and how XRP and Ripple Labs are going to change the entire financial system in November of this year. There is a ton to unpack, stuff that is not so obvious on the surface, but really beneath the surface, and the information here is going to be very, very important, so you definitely want to pay attention to this. Now, starting off, we covered yesterday how the SEC is once again investigating 3 more altcoins. This time, it is Stellar, XLM, Zcash, and Horizon. So Grayscale actually did reach out to them to ask for regulatory clarity, and surprise, surprise, there was none, because the SEC has no idea what they're doing in terms of crypto regulation. In fact, they have been called out for the complete hypocrisy of their whistleblower program, which is supposed to aid the SEC's goal of quote-unquote protecting investors, going ahead and actually rewarding people who provide information against companies and businesses who are securities law violators. Now, the reason they are getting absolutely blasted here on crypto Twitter, and we see this from Crypto Bull XRP, he says you need an internal whistleblower program considering the corruption surrounding Hinman, Clayton, and Ethereum, as well as the damage done to XRP investors. So in 2018, Hinman gave a speech greenlighting Bitcoin and Ethereum as compliant with securities. This was during the ongoing legal case with Ripple. Hinman then backtracked, saying the comments were personal opinions and should not have been interpreted to equate to SEC policy. Obviously, when you have an SEC spokesman going up there and greenlighting Bitcoin and Ethereum, anyone would assume that that is SEC policy. So a ton of hypocrisy here, and their own whistleblower program cannot detect the BS within their own system. In fact, while they do claim to be in this for investor protection, it has been estimated they have cost XRP investors up to $15 billion total in losses. So they say here that $15 billion was lost because the SEC intentionally chose not to limit allegations against Ripple, but also its executives, and alleging all XRP, including secondary market sales of XRP, are unregistered securities. This thesis is also based on the fact that many major crypto exchanges like Coinbase and Kraken immediately removed XRP from trading as a result of the SEC decision. In addition, the initiated investigation permanently puts pressure on the XRP price, and this is absolutely correct. This is why Ripple has not hit its previous all-time high. The fundamentals have only improved. Ripple has not gotten any less relevant, but the SEC lawsuit has really been putting a damper on XRP's price action, and it is estimated that the SEC has cost XRP investors in total $15 billion. So that is an absolutely staggering amount. Now, of course, I do predict that XRP is going to come out of the lawsuit on top. That is why I did open a position actually during this lawsuit on the weakness, and I will continue to buy any weakness because I think that XRP does end up winning this lawsuit, but still it does not change the fact that the SEC has made a constant effort to suppress XRP and Ripple. Now, this is pretty ironic. There's a huge disconnect between the SEC and other big institutions in the United States, specifically those that are related to financial technology. And the reason being is that if you are a financial technology company in the US, you would be absurd to ignore the power that the XRP ledger does have. So for starters here, we talk about Swift technology, the global provider of secure financial messaging services. This is a technology that banks use to actually transfer money to each other. However, Swift takes about 3 to 5 days, and the actual currency exchange fees are egregious, whereas the XRP ledger takes about 3 to 5 seconds and costs a fraction of a penny. So Swift is adopting adopting ISO 222 technology, and this is effectively international standard for exchanging electronic messages between financial institutions. Now, there are specific cryptos that are ISO 222 compliant, including Ripple, including XRP, including XLM, including HBAR, including Quant, including Algorand, and XDC. Now, I do own a couple of those in the portfolio, but this just goes to show you that even Swift technology is adopting ISO 222 compliance, and when this is the case, these ISO compliant cryptos are set to benefit greatly, in my opinion. Now, more interestingly here, besides what Swift is doing, the Federal Reserve has now set July 2023 date for FedNow, an instant settlement service launch. So FedNow will allow businesses and individuals to receive payments instantly at any time, with over 120 organizations participating. So, Federal Reserve Bank of Boston's first VP and FedNow Service Program Executive Ken Montgomery said the benefits of FedNow are instant payments being increasingly important to consumers and businesses, and the ability to provide this service will be critical for financial institutions to remain competitive. So, you see that financial institutions are acknowledging that we need instant settlement payments to remain relevant. Next year, financial institutions will be able to use the FedNow service as a springboard to provide innovative solutions to their customers. Now, what interests me even more about the FedNow payment system is if we actually take a look at the Faster Payments Task Force Steering Committee, you're going to notice that Ryan Zagone is a part of this committee who is also associated with Ripple Labs. Now, furthermore, Ripple's Craig DeWitt was recently selected as the vice chair for the Faster Payments Council, and he has directly commented on Ripple's and XRP's involvement with the Federal Reserve in multiple tweets. So definitely tons of interesting things coming out here. This is why we look beneath the surface like this to make these connections, and I definitely think that it is also very, very likely that this FedNow payment system is going to adopt ISO compliance. If the Swift technology system is updating itself to be ISO compliant, I don't see any reason that the FedNow payment system would not do the same thing. Ripple is ISO compliant. They are working with the Fed Reserve. It just makes a lot of sense. So the SEC continues to work against Ripple and all these innovative companies here who are trying to stay ahead of financial technology and the next growth curve are adopting Ripple. That just goes to show you kind of the power of this technology. We also saw a very interesting concept here out of Colombia where people were using the XRP ledger to actually go for land tokenization. So actually tokenizing your physical land assets on the XRP ledger. You can see like just the capabilities of this technology is absolutely amazing. This tweet here does a very good job. It's sort of like an infographic of what the XRP ledger could potentially do. So you can see here that the XRP ledger can act as a connector between the big banks, between financial institutions, between blockchains and distributed ledger technologies, between capital markets, between TradeFi, the Internet of Things, payment platforms, marketplaces, social media. The XRP ledger can power all of these, and XRP can be used to facilitate these transactions. Now, I'm not saying this is what will happen in the future. I'm saying that the XRP ledger is more than capable of making this happen, and that is why I really believe in the technology behind this project. Now, we got the Bank of Korea okaying initial coin offerings. There was a ban on ICOs for quite a few years, and they are set to finally legalize ICOs. This is really important. I think it could actually just really help the Bank of Korea and South Korea as a whole become a lot more innovative in the crypto space as they do start to allow ICOs. They start to allow these projects to hit the public markets again. So I will be looking for tons of innovation out of South Korea in the coming years if they do actually begin to officially legalize these ICOs once again. And the reason I am mentioning this is because Crypto.com recently secured Electronic Financial Transaction Act and Virtual Asset Service Provider registration in South Korea. So the way they did this was by actually acquiring two different companies that had this compliance already, and therefore, because they did acquire these companies, they were pretty much automatically eligible to regulate and operate in South Korea. So very, very cool strategy there by actually acquiring companies to gain that regulation. They say here that Korea is a tremendously important market for Crypto.com, and now that South Korea does appear to be more crypto friendly, I do think this will benefit Crypto.com a lot as they are fully approved to operate in this area now. We also have Dubai over here setting regulatory guidelines on crypto marketing to safeguard investors. So Dubai is getting a little more stringent with their actual guidelines here, but making these guidelines and regulations are not a bad thing. In fact, it is necessary regulatory if crypto is going to be adopted on a wide scale. So I am a fan of the fact that Dubai is doing this, and this obviously comes after FTX received regulatory approval and Binance and Crypto.com. The biggest three exchanges, in my opinion, all fully operational in Dubai, as they do start to sort of really hone in on these regulatory guidelines. Now, I do want to take the last portion of this video to address a Twitter thread here from Ty Lucky. This is another Cronos YouTuber, and before I get into it, I want to just say right off the bat, utmost respect to Ty Lucky for this thread. I actually really enjoyed reading this thread, and we're going to break it down. But before I break that down, I just want to make it very clear that nothing I say here, whether I agree or disagree, is any sort of personal opinion or shot. I highly respect Ty Lucky, and I do value his opinion, but I do want to kind of talk about this as he really breaks down the threat of centralization on the Cronos chain. So he starts off saying that the centralized mindset of Cronos Labs on the Cronos chain is an issue that has stymied the growth potential for the chain to an extreme level. I feel this needs to be addressed and discussed openly and directly because it is now being discussed privately far too often. I'll get the zoom out and look at the macro responses, but I'm not talking price action or TVL. Crypto.com and Cronos Labs have contributed a ton, especially financially, to the growth of the Cronos chain. He says, I'm just one guy, this is just one guy's opinion, but I've noticed significantly more projects looking to bridge out from Cronos rather than bridge onto Cronos. Why is that? Not just one reason, to be clear, nor are the people I've mentioned solely responsible, but to start by looking at the track record, you can scratch, claw, build, innovate, generate tons of transactions and value on the Cronos chain, but if you are not incubated or partnered with CDC or Cronos Labs, you will always play second fiddle to theirs. The bias is also apparent in the CDC app. Starting with the DeFi wallet, you log in and see Pharaoh Protocol advertised at the top of the screen for over a month, then the minted IDO advertised for a week and changed, just taken down earlier today. There are launch pads raising hundreds of millions of USD on Cronos, never mentioned or acknowledged here or on any app, but we gotta tell the DeFi wallet users about these two launch pads that raised 344K combined. So he's sort of highlighting the favoritism here towards projects that are being either launched or funded by Crypto.com. Also citing the CDC exchange now listing the minted token the day that it launched, yet there are projects working, building, contributing on a chain and in the community for months that have not been able to list on the exchange yet. To be honest, the minted NFT marketplace is a welcome sight. The UI is nice, a few changes needed like the ugly shopping cart icon, but the categories to sort collections are clean and more extensive than Ibisu's Bay, for example. Great for GameFi and traders alike. Please don't use a Spotlight collection section as another billboard. It is already weird looking at BVS moles that are not even publicly minting yet next to other deeds and moonbirds. I'm not trying to pick on minted, for example, which leads me to my last point. Competition drives innovation. Promote, support, and appreciate what you have here, not just your own products, and this can easily be a top 5 chain. But I must ask myself the same questions these project developers must. Is my time and money better spent elsewhere? Tell me to go somewhere else. I'm researching that avenue. However, the Crow fam feels like home, and that is why he basically went ahead and made this thread, just saying that he believes Cronos and CDC would significantly benefit from focusing a bit more on the folks who are already here instead of focusing on getting the next wave of people. And I do have to say, first of all, I'm going to start off with what I agree with, because this thread was very well written. It definitely does highlight a ton of issues that people are having with the Cronos chain, and this is like the most obvious one here, right? Like when you go on the DeFi wallet to see VVS, to see Pharaoh Protocol launching when it was like not even with 10 million in TVL, also announcing their minted network here, which is also just the beginning project, and sort of like ignoring projects that have been on the Cronos chain for much longer. So I definitely do see that sense of like favoritism and that sense of centralization being really pushed by the Cronos chain and the Crypto.com team on apps like the DeFi wallet. Now, the difference here and where I think that I start to like differ from people who are worried about the centralization is I don't think that that's a bad thing. Actually, let me rephrase that. I don't think that's a bad thing if you are a Cronos investor. I think if you are a Cronos investor, personally, I want Crypto.com and Cronos Labs to be heavily involved in what happens on the Cronos chain. You probably don't want this if you are a developer on the Cronos chain, because it's going to be a lot harder for you to push your product when the Cronos chain can basically just make a competing product and then advertise it all over their platforms. So I definitely do see it from the perspective of being like an unfair advantage for Crypto.com. However, it is Crypto.com's chain. I have a lot of faith in the Crypto.com team, and to be completely honest, I actually don't mind having a chain where a centralized company like Crypto.com does make a lot of the products for Cronos. Over time, I really do have a lot of trust in the Crypto.com team, and I would like to see them build out more apps on the Cronos to attract more volume, to attract more total value locked. That is what they're trying to do right now with the Cronos Gravity Bridge. I have to say, I already love the look of Minted compared to Ibisu's Bay, and what I would rather hope is that the Cronos chain really promoting their own products and making these competitive decentralized applications, that it will instead go the other way, and instead of pushing developers to other chains, that it'll simply push developers to make their products better, to really foster that competitiveness, and that only benefits the Cronos chain and all of us who are invested in CRO. So I really love this thread. Once again, thank you to Ty Lucky for releasing this thread. I do agree with a lot of what is being said, and I understand the frustration from the perspective of a developer looking to build on Cronos, but I do think that long term this is really going to push people to really be more competitive and build out the best possible products that they can, which does benefit all of us as CRO investors. Now, additionally, I do want to also highlight the fact that majority of blockchains out there are decentralized, they act decentralized, but rather they are massively centralized. We're going to take a look at Ethereum here, which has 55% of its nodes being operated by AWS. Also take a look at Avalanche here with 43.2% run by AWS. And we're obviously talking about two different things here. He's talking more about the decentralized development side of things, and I'm more so referring to like the node decentralization right now. But the point being, and something I've been saying on the channel for a very long time, is that decentralization in crypto is a myth. It has been for a very long time, and as time goes on, as more institutions get involved, it is going to become more and more centralized, and I am not resistant to that. That has always been the end goal for me, is that crypto will become more centralized, but that means that's because big money has entered the space, and if we are in here before big money, then we do stand to have a lot to gain from this centralization of crypto. So that is just my personal opinion. I would love to see decentralized finance thrive, but I don't think it's realistic. I think that crypto will become more centralized with time, and once again, that's why I'm not concerned with the Cronos chain, because I don't think it's just a Cronos specific issue. So this was a great thread by Ty Lucky. Once again, thank you for putting this out, my man. It definitely did really make me think about the Cronos chain as a whole, but again, as I sort of stated, it just makes me more bullish on Cronos, to be honest. I would not want any other team besides the Crypto.com team backing the Cronos chain, launching new products. They've already proven to make Crypto.com a very sticky platform, and if they can do the same with the Cronos chain, I mean, that would be absolutely amazing. So the Cronos chain has only been around for a year. I expect tons of growth moving forward, and I really do think that Crypto.com is going to do everything they can to continue fostering this growth. Now, on that note, I'm going to wrap things up here. I hope you guys did enjoy the content in today's video. Once again, if you made it all the way to the end, you are a champion, and let me know in the comments down below. Thank you all for tuning in, and I hope to catch you guys in the next one. Peace out for now.